Hi everyone. In this video I'm going to be talking about a concept in investing called the Elliott Wave Theory. The idea is very simple. Every individual investor has a behavior that moves in waves, up and down, up and down. That's the theory at least. So for example, how much they feel about the economy, or there's at the high end they might feel strongly about the economy. At the low end of the wave they might tend to hold safe haven investments like cash or precious metals or bonds, especially treasury bonds and so forth. The idea is every individual has their own wave, and a wave is defined by the length of time in which they move a full cycle, and also by the magnitude of the wave. And the idea is the economy as a whole is a collection of these individuals, and by aggregating these waves, we have patterns where we have cycles of combinations of cycles of different length. So, for example, a lot of people talk about you probably heard this, the Dow to gold ratio. And if you look at this ratio, it has a very defined cycle length around 40 years. So we had the peak in the booming 20s, then we had a Great Depression and World War II, and we had another boom during the Kennedy administration, mid-60s, and then we had the stagflation in the 70s and 80s, and then we had the dot-com boom in the late 90s, early 2000s, and right now, of course, we're in a recession where the Dow to gold ratio is relatively low again. So that's the 40-year cycle. There's a word for that, I believe. It starts with a K. I'm going to put a link to these theories on the video. But that's the 40-year cycle, and it favors precious metals right now if you believe in it. There's some people who claim that precious metals have a 2-year cycle, in which during the even number years, so we saw this in 2008, during the even number of years, the metals tend to overshoot and then correct in the downward direction. So gold overshot to 1,000, then corrected to, I believe, 700. Silver overshot to $21 or $22, and then it corrected down to $10. A lot of the precious metals, and palladium showed it very clearly. It overshot to almost 600 and then corrected to 150 or so. I think copper was even more drastic, but you get the idea. And then during 2009, all the precious metals tended to climb very steadily, and so there's some people who think that now is a rather bad time to buy precious metals, as we have yet to see the 2010 correction, and this happened a few even number years this decade. 2006, I believe, gold overshot to 725 before correcting to the mid 500s. 2004 was mostly silver that overshot, if I remember the charts correctly, to 7 something before correcting down to 5 something. And the even number of years tend to see the metals moving in the direction predicted by the bigger cycles, like the 40-year cycle that we talked about. So if we're correct, right now is basically, if we go back 40 years, 1970, and actually the 70s are a bit of an anomaly because gold prices were held artificially low until 1971, so there's a lot of people who think gold actually should have been anywhere between 50 and 100 in 1971, depending on who you listen to. So based on the 2-year cycle, if we expect gold to correct maybe to 1,000 or so, between 1971 and 1980, gold went up about 20 times. I think silver went up from $2 to $50 about 25 times. So if we expect silver to correct to 15 during the next downward 2-year cycle, then 15 times 20 is 300. And I believe that's the worst case for silver. It could do a lot better because of the gold to silver ratio. In 1980, when gold was $800 an ounce and silver was $50 an ounce, the ratio was 16 to 1. And actually that ratio is quite natural because that's the ratio that gold to silver has historically been during Roman times or ancient Greece or any ancient civilization you look at, and even until the Roosevelt administration, that was basically the ratio for gold to silver. Worst case 300. Best case, if gold is 1,000 now, we expect it to climb 20 times during the next 10 years. That's $20,000 per ounce. And silver, if it were 1/16 of that, is 1,000 an ounce. So no matter how you look at it, silver has a lot of upside in the next 10 years to come, based on the Elliott Wave Theory. Thanks for watching.